have challenges from time to time, but we can have fewer challenges if we learn to read our charts. There's our segue. YouTube is going, so say something smart, guys. We're going to learn to read charts today, same as we do every day. We're going to focus on the advantages, just 3 rules, 2 charts, keeping it simple, and our life is going to revolve around advantages. And good morning, Zest. Good morning, Pete. Good morning, Ron. Good morning, Sergio. And we're going to turn these advantages into trades, but not just any old trades. We're going to take 2 charts, 3 rules, and you guys are going to learn how to take the high probability trades, the trades that you can prove with a little bit of study, typically win 70 to 80% of the time. Hey, good morning, Pam. Nice to have you in here. Man, I like seeing the new faces in here. For those of you that don't know me, let's do an introduction, right? Because we got some new people. Pam, are you evaluating the software or are you just kicking tires? Either one is totally cool. But I teach this room from a place of simplicity. So for those of you that don't know, I started my day trading journey in 2020. I just had my second spine fusion. Couldn't go back to my chosen career. And my brother said, hey, right on. And my brother said, hey, why don't you become a day trader? He goes, I've had this company for the last 25 years. It's pretty amazing. All you have to do is learn some basic rules and go. And I said, awesome, I'm going to do it. And as I was learning, I wasn't teaching the room. I was just where you guys were. I was a student. And my brother laid out in front of me, and this was a private conversation. He said, Mark, I'm going to give you some rules. I want you to learn them. Just 3 rules. He goes, and I want you to practice them. Don't go live money yet. Just practice them. And every time you take a trade, drop it in the room. Guys, give me a Y if you can hear me, please. I want to make sure. Yeah, Pete will know that it's him. If you ever can't hear me, let me know. Pete will know that it's going in on his side. He goes, just do me a favor, Mark. Post in the room. Every trade you take, post in the room. Don't send me private messages with your charts. Say, hey, this is what I did. This is what I saw. How did I do? And he said, and track your performance. No sound for you as well. So let me type this in here. If you have no sound, go to your, what do they call that thing? Control Alt Delete. Task Manager. There we go. Go to your Task Manager and kill Discord completely. Usually fixes it. There we go. And he goes, dude, don't look for every move. Look for the best moves. Learn how to do it easy. He goes, there's plenty of time. And he gave me this picture right here. And he goes, this is how you're going to get there, Mark. To which I lovingly replied, I'm way too smart for that. And I lost a lot of money really fast. Lesson learned. So I teach this classroom. Just so you newer folks know, I teach it with the assumption that you know nothing. Whether you've been in the markets or haven't been in the markets, whether you understand an indicator or you don't understand an indicator, absolutely nothing is deemed obvious. And that was the word that killed me when I started. Well, it's obvious that that's not a trade. Well, no, it wasn't, because I'm new. So I try to carry that over with what I do. I try to say things a million different ways, but I do say the exact same thing. I say, let's learn to read our charts. Let's recognize advantages. And we're going to do it on 2 platforms. So Pam, I'm not sure which platform you're on, but I do teach these high probability trend trades for both NinjaTrader and TradingView. The rules are different, so make sure that you're latching onto the one that suits your needs. But when you start focusing on your chart reading, when you start focusing on advantages, what happens is NinjaTrader, awesome, is you start understanding where the market is likely to continue, and we're going to use that for entries. There's going to be this point where there is a fight between the buyers and sellers. We're going to pinpoint where that fight is likely to be lost, and we're actually going to enter with the winners there. You'll understand where the market is likely to go. This is going to help you with targets. And you're going to be able to find out where the market is likely to stop. You're going to use Fibonacci, Pam. Some of you may use zones and areas, but these concepts are what are going to carry you. The only thing we can ever be in control of as day traders is whether or not our rules are met. And your rules just describe a pattern. So as we move forward, guys, we're going to go through it. We're going to start with NinjaTrader, but post lots and track. Okay, guys, I'm going to do a quick reboot. Give me just 1 second. I will be right back, my friends. I don't want anybody to miss out on anything. So, I'm going to go to my task manager and I'm going to kill Discord. Kablooey. And now I'm going to come back. And I'm going to get back to that education room. I don't know if you guys can hear me or not. Back to the education room. There's my screen. Guys, give me a Y if you can hear it. Andy's got me. Sergio has me. Z-Robot says loud and clear. 5x5, all the things. Cool. Pete, I'm rooting for you, brother. Are you there? Talk to me, Goose. Good morning, Miss Trina. Nice to see you. All right, guys. So we're going to learn rules. And I want you to realize that you can let it be pretty simple. It can be rules met or rules not met. And that's typically the easiest way to go about it. If your rules are met, I'm trying to find all my stuff here, then what you are saying is that I have a pattern. There is something happening where I know I have an edge, where I know I have an advantage. I'm choosing to enter the market. And if your rules aren't met, you can say, why on earth am I trying to enter the market? And that's up to you. You're in control of that. The high probability trend trade, as taught on Ninja, is 3 rules, and that's it. And when a rule is met, it creates an advantage. So rule number 1 will provide us with the advantage of momentum. And momentum means that the market is going to be very difficult to stop. The people that are in control are pushing, and they are pushing hard. Rule number 2 says no termination conditions. Those are areas that have the potential to stop a trend, to create reversals. And when there are none, we're going to call it a clear path. Now, what I want from you guys that are brand new is I want you to learn the lesson on momentum. I don't want you to worry about a trade. I want you to worry about momentum, because momentum's hard to stop. And when you get that lesson, let's focus on giving it a couple days towards learning the magic phrase to identify a termination condition. Because once you have momentum and path, guys, you have the keys to the kingdom. You will have everything you need to create your own very profitable, very consistent, very predictable plan. But until you get there, Pam, it's going to feel like this. I'm not going to lie to you. There's going to be a lot of information coming at you in the first couple days. Learn the language before you start searching trades. It can be a little overwhelming. I've been there myself. So let it be 3 rules. And even more importantly, let it be the only 2 charts that come in the workspace, guys. There's a big chart and a small chart. I don't know that we can make it easier than that. Oh, no, wait. We can. Because your large chart, this big, slow-moving, broad stroke of a brush chart, it only takes 1 bar, the most current bar. And inside that bar, you are going to be able to define the direction so that you know which way you should be looking for your rules to be met. You'll be able to define the momentum, making sure that that first rule is in play, and you'll define the areas, making sure that you're not trading into a brick wall of yuck that could stop the trend. All of that happens on the most current bar. Now, your entry chart is a small chart. It's a much faster moving chart. It shows kind of the inner workings. Think X-ray. If you look at the yellow box around the 1 bar given 66% of the good stuff, all of this happens. This is where we pinpoint where the market is most likely to continue with the big chart trend. And we're using these two charts because it's important to remind yourself, especially as a new user, you're not in control. You never have been, you never will be. There are forces that create trends, that establish momentum, that react at areas. That's the big crowd. Your rules are designed to keep you in line with the big crowd because the big crowd typically wins. Now there is a small crowd. You remember in high school, there were some leather jacket wearing thugs that like to smoke outside in the alleyway. That's your small crowd. They like to push, they like to fight. They create a tiny movement counter to the underlying trend. And in the small crowd, I love them, but they lose like 70 to 80% of the time when the large chart rules are met. So your awesome entries are going to pinpoint precisely where that small crowd is most likely to lose their fight, and that becomes your entry for the highest probability trend trade. So two charts, three rules, and a handful of indicators, guys. The first indicators, I'm gonna blanket term it. Areas. What's an area? It's a horizontal line on a chart, guys. That's it. Don't overthink it. They do have names, but I like to say areas are bouncy. You're going to see divergence highs and divergence lows. You'll actually see a line print if there's a loss of momentum at a pivot. These lines become areas that could be bouncy. You're going to see Fibonacci resistance and Fibonacci support. These lines, in an uptrend, resistance is where that large crowd's most likely to make decisions. Same in a downtrend for the blue. These are areas that could create bounces. Yellow one-to-ones do the same, mid-bands do the same. So areas are just horizontal lines on a chart, whether it's large or small. Trigger lines are the second set of indicators that you need. And the cool thing is this is the last set I'm going to talk about. There are small triggers, two solid lines work together to create the small triggers. There are large triggers, two dashed lines. These are fast moving averages, slow moving averages. All you need to know is small and large. When they're green, they're up. The same is true for the background. If the background is green on your large chart, you're in an uptrend. Look to go up with it. If it's red, you're in a downtrend, and trigger lines will be red when they're down. And guys, what we're going to do is we're going to take areas and triggers, and we're going to define the highest probability trend trade that you could take. Now, let me give a little disclaimer before we get too deep. This is the plan that I'm about to drop in the room for you. And this is what we're going to talk about. This plan, the KISS plan, the Keep It Simple Sunshine plan. This is a plan designed to be a stepping stone in your learning journey. Guys, this is going to be a way for you to learn to read the indicators as you focus on the best of the best trade. The trades in the plan, high probability trend trade, and then I even throw in a medium probability trend trade for you so you don't get too bored. Guys, this is a way to optimize your chances of success as a brand new user because confidence comes from the memory of success. That's one of my favorite phrases. You will craft a plan tailored to your personal goals based on your experience reading the indicators. So we're going to break this down one by one, and I'm going to give you your next gift. And please download these. The next gift is the Nexgen tracking sheet, guys. This is a way for you to do a couple different things. First, it's each of the rules broken down individually in green, so you know exactly what that pattern looks like when things are coming together. And I thought if you're not going to trade when the rules aren't met, you should know what it looks like when the rules aren't met. There we go, Pete. Good to have you. So rules met, rules not met. Guys, we're looking for three greens to create a trade. Nexgen's been teaching people to do this for darn near 30 years. Here's about 450 pictures of the pattern we're about to discuss. Commit it to memory, guys, because it looks the same darn near every time. There's a place for you to put the pictures you're taking, and I am going to encourage you. Take a lot of pictures, write on a lot of charts, guys, because what happens bum, 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 is after 19,645 pictures, the market moves slow. The rules jump off. You know exactly what you're going to do. It doesn't take that many. That's just me bragging. 2025, I did a little over 11,000 pictures, guys. And I run the room. I'm good at chart reading. And then finally, there's a trade tracking sheet. This trade tracking sheet, I think, is one of the most important tools that you can use because it gives you a place to put a picture of your trade. On the trade tracking sheet, it even shows you how you should annotate your chart for the absolute best feedback in the room. Whoops, where did that go? It gives you a place for feedback from class. And what happens, and this is my hope, guys, my hope is that you go through this little drill. It's 2 to 3 minutes every morning. Look at what you did yesterday and ask yourself, what worked? What's bringing the money into the account, right? Is it following rules? Is it having momentum? Is it embracing the clear path? Guys, latch onto it first thing in the morning. Stay focused on those things that are bringing you success. And then this is the one that sucks because you got to answer it truthfully. What didn't work? For most of you, it'll be trading into areas that can stop the market. Not going to lie. That is the number one broken rule among new users because it's the same rule that forces you into being patient. Guys, if you can't see what didn't work, guess what? When you post in my room, I'll help you see what didn't work. But I won't just say, hey, you kind of screwed that one up. I'll say, hey, this is exactly what happened. This is exactly where it happened. And this is how we fix it. And guys, every time you go back and study what you did yesterday, it sets you up for the day. It accelerates the learning. And everything I do in this room goes back to 3 rules, no matter where you are with the software. So we're going to start with rule number 1. Seems like a good spot, right? Rule number 1 says the large chart, the slow chart, the big crowd must have strong trigger lines because we're insisting on the advantage of momentum. This is my business. I want to run my business as profitably as possible. Strong triggers is black and white. Strong triggers for the brand new user either is or is not. So when you're in an uptrend, the background is green. The only way to have strong triggers is if both small and large triggers are green. And when you're in a downtrend and the background is red, the only way to have strong triggers is when both are red. Guys, I try to put these little keep you from getting in trouble clips in here. What is strong triggers? Well, in an uptrend, your small triggers will break above and away from the large triggers. There will be space created between the two. Space is strength. And I want you to do this. I want you to picture scissors. And when scissors are open, we can cut. They can cut us a check. And in a downtrend, it's the exact same concept. Your small triggers must break below and away from the large triggers. Large triggers are wide. And once again, it's scissors. And when scissors are open, you have strong triggers. So separation is strength. When I have strong triggers, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum has been a battle cry in this room for better part of 5 years. Odds favorable momentum pushes a market in the direction of the trend. Odds favorable momentum can help us breaking key Fibonacci areas. Odds favorable momentum will even cover some of the mistakes that we tend to make as new users because the momentum is difficult to stop. But momentum goes away. I want you to picture the scissors closing. The small triggers return to the large triggers. And when there is no separation, you have weakness. And when you have weakness, anything can happen up or down. Now, Ron jokingly said lover of language this morning, and I really am, because I want you to ask yourself, if I'm going to bet $100 on this trade, do I want to have odds favorable? Do I want to have strong? Or am I content with weak? With anything can happen. And if you start using the language when you see the look, it becomes difficult to commit to a trade with the advantage gone. I firmly believe that. So let's see if there is a live market. There sure is. Separation is strength, but now my small triggers have turned red. Guys, this is the most current bar. Larger up, smaller down. Can you give me a why? If you see that I actually don't have rule number 1 met, I can't under any circumstances if the colors between the triggers don't match one another. Pam, does that make sense? Now check this out. There's that strong trigger look, right? Separation, break an area, and then right when they get weak, there's that big retracement that anything can happen. Strength creates a very definitive advantage, guys. Weakness takes that advantage away. So as the brand new user, focusing on strength already puts you one ahead of the game. The next one is making sure that there are no termination conditions, guys. Make sure that you have room to profit targets because termination conditions can stop a market. On your large chart, horizontal lines are where decisions are being made by the large crowd, guys. They respect these areas because it was their movement that created these areas. And what we're going to do is we're going to accept that we're not invited to the decision-making process. So there's a simple recipe for defining a termination condition. It begins with price reaching resistance. That's where we're starting. Your dynamic Renko bars, your green price bars are pushing up. And they reach, they hit, they smack into Fibonacci resistance, yellow 1-to-1s, or a divergence high. And when they do, we're done with price, don't need price. Price is irrelevant to the process. We will let our trigger lines tell us exactly what we need to know. So price reaches an area and then shout out loud to the heavens, where are my triggers? And if all 4 trigger lines remain below that area of resistance is a textbook termination condition. And there's a couple things that can happen. A termination condition could be a termination condition for just a moment, and then they could smash right through it with no regard. That would be the decision to continue the trend. There may also be a pretty ugly fight, but then continuation. This ugly fight will typically pull you out of a position and create a loser. And then finally, it may reverse completely. Whether it's a top or a bottom, if a termination condition, if price reaches an area and absolutely none of the triggers get through and they decide to go the other direction, we call it a strong top or bottom. And a strong top or bottom is the precursor to the highest probability trend trade you could ever take. It's not mandatory, but it definitely creates some warm fuzzies. So price reaches, no triggers, no trade. Does that make sense? That's really not too hard, right? So let's see. Price reaches the divergence low and the triggers don't break, and that was your bottom. This is crude oil. Crude oil's been a little wonky lately. Just a lot of running Venezuela stuff, right? Let's see what the S&P is doing. They got a little more movement in these cats. Perfect termination condition where the reversal came from. You knew about that termination condition for almost an hour. Perfect termination condition where the top came in. Look at this. Boom, boom, boom. Fits the rules for no shorts. 1, 2, 3, I don't know, 3 times, 3 avoided losers. Same up top. Guys, learn the recipe. Price reaches an area, triggers don't break. Wait for the reaction. See what's going to happen. They break. Guys, they break all the time. So this is your timeline, your flow chart, whatever you want to call it, of what it looks like when an area breaks. First, price reaches the area. The triggers remain above. Guys, every line that you reach on a chart will be a termination condition, at least for a moment. If you are not already in a short position, all it says is, hey, relax. Let's wait for the reaction. Maybe don't enter that position because you'd be breaking rules. If your small triggers, not price bars, not color of the fib, if your small triggers smash through that area with momentum, this area now has the potential to break, but it's only potential. And because it's only potential, you're going to have to manage it a little more assertively, a little more aggressively. You may have to get to a break-even stage a little faster, take quicker profits, because you're only trading the potential. But if all four triggers break below the area of support, and I want to do something real quick. A lot of you are going to get hung up on blue and red. If I make it yellow, it's exactly the same. No triggers, wait for the reaction. 2 triggers, potential, manage assertively. 4 triggers, oh, life is good, the path is clear. We are now in the high probability scenario. Support will actually begin to behave as resistance. It's pretty awesome when it does it. And your path is clear. Rule number 2 remains met all the way until you hit the next area. And when you hit the next area, we're just going to go right back to number 1, and we're going to say price reaches the area. None of the triggers broke. I choose to sit on my hands. And let's do a kind of a real world example for you guys. Let me see if I can find a good one here. We'll get out of the consolidation. All right. Right side of my screen. Price reaches Fibonacci resistance. 1, 2, 3, 4 trigger lines remain below resistance. Can you give me a why? If it makes sense that it's okay to pump the brakes, to stop, to wait a minute, wait for the reaction. Are they going to reverse the same way they did here, 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 and here? Or is it going to break? I don't know. Let's wait. The market continues up. And now look at that. Now I've got 2 triggers above. This is the second trade, guys. There's a lot of potential in this look because with all of that momentum, especially from a strong bottom, this area has the potential to break. The plan that I give you says with 3 of the 4 trigger lines through, holy smokes, now we're looking good. That break is more likely to happen than a reversal. And it's not until, look at that, boom. Now I've got a clear path. Not only do I have momentum, I have a clear path. The only thing left to do now is look for an entry. And I don't know that this gave one before it hit Fibonacci resistance. And now it starts back over. And boom. There's that untradeable bounce. Pretty cool, right? Guys, focus on advantages. The trades will present themselves via the advantages. I love this. Price came down, hit Fibonacci support. None of the triggers broke, and sure enough, the market goes up. Strong bottom. Price reaches Fibonacci resistance. None of the triggers have broken through. All 4 remain below. I know it doesn't mean that the market's going to reverse. It just means that I got to be cool for a second. Wait for the reaction, right? Small triggers blow through. All the momentum, the potential is there. Pete, I thought you were getting a new computer. I need you to feed the gerbils, buddy. Some days you're the boot and some days you're the butt, right? And then guys, 4 triggers through. Still on the truck? Right on. So is my gaming chair. You and I are both. We're like kids at Christmas. 4 triggers through. The area is broken. The path is clear. Life is good. And it will remain clear until you reach the next area. Resistance even behaves as support. Guys, I encourage you, I can't demand, but I do encourage you, let it be pretty simple. Price is going to do what price does. Price reaches Fibonacci support. Absolutely none of the triggers break. That's a termination, no matter how you slice it. 2 triggers through is always the potential, never a clear path. Look at that. 3 triggers through, and even before the 4th trigger gets through, son of a gun, there's another line. This is normal. So normal that we've got a picture of it. There will be times, and Pam, if you don't get anything out of today, get 90% of your day will be sitting on your hands. There will be times when your path isn't clear because of stacked areas. There will be times where the market doesn't give you momentum. There will be times where you can't define an entry. This is 90% of your day. The cool thing is the futures markets collectively trade an average of $220 billion hourly. The S&P, which most of you end up trading, typically exchanges about $174 million a day. The NASDAQ, some of you will trade that, that exchanges about $270 million a day. And yeah, guys, if the normal tricks don't work, get with tech. Let them take good care of you. You don't have to be in every move. You don't have to be the first person in. You don't have to be the last person out. And you're really going to learn to squash that fear of missing out, because you're going to study hard enough to build confidence in your pattern, in your trade, in your advantage. And I want you to see something. Most of you don't realize this. If I average, whoops, $400 a day in a market that moves millions, and I do that on average over the course of 252 trading days in a year, your hypothetical total is $100,000 before taxes, before commissions. Guys, that's a pretty good way to make a living. And that typically takes you 5 to 7 minutes of actual work a day. The goal isn't to find all the trades, but rather to find the best trades, to find the trades with the biggest advantage, the trades that provide an edge, the pattern that you can prove wins more than it loses. And guys, once you have momentum and once the path is clear, remember, give it a week to learn these, get good at them. We're going to go amaze our friends. We're going to amaze our friends with the accuracy of our entries. I like it, Victor. Turn that news off, though. It's rotting your brain. Rotting your brain. Guys, your entry is very specific. Your entry latches onto a phrase. And guys, once again, Pam, you don't know this. I was an English lit major, so I really do believe in the power of words. I want you guys to learn this phrase. I want you to take this piece of paper, print it out, put it on your desktop. Don't forget it, because you will call your shots. You're going to use a limit order, which means you're going to wait for the market to come to you. And then you will buy or sell a pullback, that fight that comes from the small crowd. You will do it at an area, fibs, mid-bands, yellow 1-to-1s, because areas are bouncy. And that area has got to be inside of triggers for it to be the high probability trend trade entry. And it's inside of the large triggers. And your small chart, your entry chart, your fast chart will have two sets of large triggers. There's some smooth talking. These are native to the 5-1. If I were trying to define the momentum on the 5-1 chart, my entry chart, I would look at the separation between the small triggers and the smooth and say, wow, those are strong triggers. The stepped triggers, you're not my real triggers. These triggers are just the large triggers from the large chart. These work together to define where the fight, where the retracement is most likely to go. Price returns to large triggers. It's called regression of the mean. That's as mathy as I will get on you guys. It's the areas tucked inside. This is what we use to create the bounce to go in the direction of the large chart. So I give this picture. I haven't given it a while. I'm going to drop it in the room. There's this concept that I call favorable large triggers. And it means that your large triggers from both charts are like two snakes riding piggyback. This is going to give you the highest level of accuracy and the lowest amount of risk on a trade. It's not the only look, but that is a damn good look. So it's just a pattern for entry. When the large chart says up, I want to go up with it. When the large chart has momentum, I know that it's going to be difficult to stop. When the large chart has a clear path, there is nothing in the way to create a bounce. Your small chart will be screaming north, and you're going to have the fear of missing out. And you're going to say, man, they're going without me. I'm never going to make any money. Why won't they retrace? Novak is a con artist. This is some baloney of the grade A variety. And then the fight starts, guys, and the fight happens a lot, and it begins with a reversal bar. But the reversal bar is not your entry. The reversal bar says, hey, guess what? The fight's on. Use those large triggers. Define right where the fight is most likely to go. Somewhere from the top line to the bottom line. The tighter they are, the smaller the range. But triggers are like clouds to a skydiver. We need something bouncy. Fibs, midbands, and yellow one-to-ones, areas, horizontal lines inside of those triggers are where the market is most likely to bounce and continue with the large chart advantages. Sometimes you'll have multiples. You may have fibs, a midband, yellow one-to-ones, and they can all be the point where the market bounces. We'll create a window. I call it the window of opportunity. I can't say it. Lost my joke. Guys, that's it. That's the accuracy. That's where the market is most likely to continue with the prevailing trend. Your job will be to activate a limit order just above the highest point of support because the large chart is screaming north with nothing in the way. I don't want to trip over pennies to try to save dollars. If they get to the highest area of support, you are now in a high probability trade. You're in a high probability trade, trading the pattern. You know exactly where the market is most likely to continue. And what that does for you is it tells you also where the market shouldn't go. If this is going to be part of that 70 to 80% winners, it shouldn't get through the retracement zone. It shouldn't blow through the areas inside of those triggers. And if it does, you'll be waiting with a protective stop and you will take a loser. Math people, help me out. If something wins 70 to 80% of the time, how often does it lose? If I take 10 trades using this methodology, how many can I expect to win? How many can I expect to lose? Is anybody that smart? I don't know. Probably. A lot of big brains in here. Guys, it's 20 to 30%. 20 to 30% of the time, you will lose your trade. 20 to 30% of the time, you will take a loss. 20 to 30% of the time, the market will go beyond where it's most likely to continue, and you will accept this as a cost of doing business. I have never met a 100% day trader in my life, ever. Now, I've met some people that brag that they are. I like to call BS on that one. There's a lot of people in the room that only show winners, and I still think that's pretty fictitious. Guys, it's a part of it. But with this methodology, when you have direction down, when you have momentum with strong triggers, when the path is clear, this is your pattern. Pull back to an area inside of triggers. And if they get through that area, if they get through that retracement zone, no trades are taken from the wrong side of the triggers, above them in a short, below them in a long. That is exactly where the market shouldn't go. And yes, I've got a picture for it. Initial stops are placed where the market shouldn't go. That's where your advantage is gone. You no longer have an edge. Why do you want to be in that trade? Guys, more trades are lost from the wrong side of the triggers than I care to discuss. Using phrases like, well, that midband should hold. That fib should create a bounce. Once you're on the wrong side, guys, it's game over. But the cool thing is if you get a down bar in your short trade or an up bar in your long trade, you're going to move that stop. You're going to tighten it. Your KISS plan says 2 ticks above. It is not uncommon or unheard of to see Nexgen users sniping these amazing entries and having 3 or 4 ticks risk on their trade when everything is said and done. But you've got to learn the pattern. So here we go. When the trend is up, my choice, because I like to have an advantage, is to only look for rules to be met for long trades. So the first thing I'm looking for is strong triggers. Pay attention to the bar with the circle on it. Separation between the small and large. The odds are favorable for the market to continue up. And then I'm making sure that I know what's going on with my path. 2 triggers are above that divergence high. 2 triggers remain below. I can say without hesitation, this area has the potential to break. I choose to manage assertively should I find an entry. And the market is trading all the way up here at 59.45. And Pam, you are going to say, dang it, Mart, I've got 5 ticks. I'm not taking a trade with 5 ticks. And I'm going to say, yeah, Pam, that makes sense. That's intelligent trading. But check it out. You're going to learn how to wait for the pullback to the area inside of triggers. And suddenly, you've got 30 ticks of profit because your great entry creates a very manageable trade. And this is your pattern every time. When the large chart rules are met, we don't trade these tails. We trade pullbacks to areas inside of triggers. You'll see a lot of charts presented with these circles because if you go back to a live chart, and let's see if we can find one. And you've got momentum and your path is clear, and we're just going to do it even without the clear path. And I circle the tail. Let me show you what that tail looks like on a smaller, faster chart. Boop, boop, boop. We got to back up a little bit. Man, that was 4:54 in the morning. That was early, but sure enough, right back to areas inside of triggers. This one happened to be into a termination condition, but if you scroll through, there's another one with the potential to break. Let me just circle the tail. Let me learn the pattern. Let me not worry about making money as a brand new user. Let me focus on identifying the pattern that has been proven to create results. Do you see it? But it's only the potential to break, opportunity to make some money before they decide to turn it around. And the market goes down. And this is where we are currently. I am void of momentum. I don't have a clear path up. I'm in a downtrend, but I don't have momentum down. I'm just in a holding pattern. And if you were watching the S&P, what time is it? 18 minutes ago, termination condition for the win. And guys, this is it. Whether it's November 6th, whether it's 2021, whether it's 2022, it is one pattern. It is one trade with 3 rules. Dun, 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 dun. And those rules create an edge, create an advantage, give you the opportunity to take a trade that you can prove wins more than it loses. And how you're going to grow with this is your first trade is the high probability trend trade. Learn to do it easy. Learn to have that advantage. Learn to read your charts. Each indicator on every chart agrees with the rules for the trade. If you begin looking at your charts in terms of advantages and not the riches that you want to acquire, you'll notice if one of those advantages goes away. Puts you in what we call a medium probability trade. And this is a trade that's probably going to be the majority of your trades. It means that most of your indicators align for the trade. However, a small issue exists. Your chart reading will let you know that one of your key advantages is gone. Your chart reading will give you the ability to manage it a little more assertively, to get to break even, to take quicker profits. You'll also have the right, should you choose, to look at your chart and say, son of a gun, 2 out of 3 are gone. This is low probability. I'm making the choice as an individual business person to not take low probability trades because I lose those more than I win, and that just seems ridiculous, guys. You're in control of the entry, and when you just know what's working for you and against you guys, it helps you make decisions not only on entering, but how assertively, how aggressively you need to manage them. And that is the high probability trend trade. So Pam, I'm going to let you know tomorrow morning, I'm going to say the same thing. And every day, probably for the rest of your natural born life, you're going to hear those rules reiterated, repeated, see examples of them. And we just bombard you with simplicity so that you can grow outside of it and find your next trades. Are there any questions, guys, about the high probability trend trade? Go through, study them. It'll make it easier. And now we're going to go to TradingView. TradingView is, if you mention them, you can rewatch 500 record. Yeah, If you miss them, you can rewatch 500 recordings of the exact same rules. Guys, go to the live. And even better, John, I don't know if you know that I did this. Before Christmas, I did a 100% 101 in-depth, exactly what we just did. One video, guys, non-stop shopping. All right, let's talk TradingView. TradingView is different, but very similar, guys. TradingView is 3 rules so that you can find a trend trade that you can prove wins more than it loses. TradingView is only 2 charts, a big chart and a small chart, letting you know direction, momentum, key targets, and terminations on the large chart, the 15-minute, guys, that's a long time. And the 1-minute chart defines immediate strength. It's going to define your entry. Large crowd, small crowd. Your large chart is so stinking slow that it doesn't even use background colors the way I've set up the workspace. Your large chart is so slow, you don't even have large triggers on that large chart. You're really just going to see those small triggers. When they're cyan, they're up. When they're white, they're down. Now your small chart is going to have small and large. And we're going to use this to define momentum. And it's still just small and large. Cyan and white, up and down. Green and red, up and down, guys. Should be familiar no matter which platform you've been accustomed to. Now here's the one that I want to give you guys, and I'm going to encourage you. Don't just learn the names. Learn how you're going to use them on TradingView. You're going to have divergence highs, divergence lows, one-to-ones, mid-bands. All of these are very familiar. It tells you a divergence high can be a target on that large chart. It can also be a termination. Same for a low. One-to-ones can be targets, terminations, or used for entries. Mid-bands, targets, terminations, or used for entries. Outer bands, areas of exhaustion, targets and terminations. Learn the usage of these areas. And what happens is, oh, John, I was going to show that picture. I love it. Hey, Junior. John Novak just brought up the picture. This is trade number 1 from our 2004 plan. You guys are learning it right now, 20 years later, which is pretty awesome. Areas are bouncy. So let's find a trend trade, guys. This is my favorite trade that I've ever taken with Nexgen, and I've taught and taken a lot of them. Trend trade's only 3 rules. Prove it works, you'll buy us a beer. Yes, you will. I always tell people, and I got this from my brother a long time ago, if you put the effort in to disproving that this trend trade doesn't work, if you learn it well enough with the focus of saying this is some cockamamie stuff, you'll be with us forever. You'll be one of those people with the big X's or the 15s next to their name. We've got clients that have been with us 20 plus years still trading because it works. Trend trade. You have to define the trend. 15-minute, not trading directly into areas. You want a clear path. 1 minute, not trading directly into areas. You want a clear path. Guys, how easy is a trade where the first 2 rules are the exact same rule? And then we're just going to buy or sell that pullback, that fight. We're going to do it on the smaller, faster chart. We're going to do it at an area, but a little difference on the entry. So let's define trend. The trend is either up or it's down, guys. You can either buy, you can sell, you can wait. If the small triggers on your large chart are up, the trend is up. I'm looking for rules to be met for long trades. If they are down, I'm looking for rules to be met for short trades. Is that the only way to use the software? Absolutely not. It is the highest probability way to use the software as a brand new user as you learn to read your indicators. Direction is defined by the 15-minute small triggers. Once I define the direction, rule number 1 says that the 15-minute is not trading directly into areas. Remember, guys, these are big, slow charts, 15-minute charts. So I want you to find the most current price, and I want you to say, with these up triggers, I'm only looking to go long. Do I have room before I hit something that could behave as a termination? If the answer is yes, it's time to get off the large chart. If the answer is no, it's time to walk the dog, go make a sandwich. But if you have room, you're going to do the exact same thing on the 1 minute. You're going to say, When I enter the market, do I have room to make money? And if I don't, I'm just going to sit still, do nothing. I have to have room to trouble from my entry point. So it's imperative that you learn the entry. Looks the same every time. The entry rules say buy or sell a pullback. That is that fight by the small crowd. Do it at an area, one-to-ones, mid-bands, zones if you have them, support and resistance, but don't just jump in at the area. You're waiting for an up bar where both corners finish above the small triggers for a long or below the small triggers for a short. We call this the weak side of the small triggers. And the weak side of the small triggers is where reversals come from. And no matter how much you want the market to go up, as long as it's on this side, the left side of the triggers, it's probably going down. So it's just an entry pattern. When the small triggers are up, when there is room to trouble, guys, the market's going to be trading all the way up here, and you're going to be thinking to yourself, damn it, I'm never going to make any money with the software. And then your small triggers turn against you. They point down when the large chart points up. This is where you can call your shots. Papa yesterday asked in the room, Mark, show me what you mean about calling shots. Papa, I did this for you this morning. When the rules are met on the large chart, hey, get over here. When the rules are met on the large chart, you already know that you need a pullback to an area and a close on the weak side of the triggers. You will call your shots before the market ever gets there. And then from that one, I knew exactly where the areas were, and guess what? It went to the lower of the two. It gave me the close on the correct side of the triggers, and that's where the market continued up. Pretty awesome, right? I'm not just the Hair Club for Men president, I'm also a member. So when it's up and there's room, pull back to the area, reversal bar up, closes on the weak side. That's where the small chart reverses to get in line with a large chart. When the triggers are down, when there's room to trouble, small triggers roll, so I call my shot right at the area, but I don't just jump in, I wait for the down bar that finishes on the weak side of the triggers. Guys, this really isn't a difficult trade to learn. It means that you do have to sit still a little bit, but this is a methodology that Nexgen has been teaching for the last 21 years. Pull back to the mid band, close on the other side, on the weak side. Is everybody good with that? The trigger lines are up. Whoa, look at that. I don't have any room to trouble. Not doing anything. That's it. I'm done. That's it. So I just sit still and say, dang it, there's nothing to do. Now let's talk management real quick. I have spent the better part of an hour only talking about entries because great entries create manageable trades. Great entries reduce risk. Great entries typically give you room to make money. So on TradingView, you can know exactly how to manage your trade before you ever enter. And it's pretty easy. On the big chart, on the 15-minute, once you define, hey, my triggers are up, I'm only looking for long trades, I want you to go through this and I want you to memorize this little chart here. There are three places where the most current price can be in relationship to those triggers. They can be left of the triggers, whether they are up or down. They can be left of the triggers. They can be right of the triggers, or the most current price could be inside of the triggers. And there you are. You're looking right there. Management starts with this comparison. If you are left of the small triggers, this is the strong side. This is where it's hard to stop. This is where 1 minute areas are more likely to break. Guys, that's your patience piece as you're waiting for the entry, not going short against the strong side. So if my small chart or my large chart is on the strong side, that's my bigger move look. That's my heck yeah, best of the best, can't wait to take it. If I am to the right of the triggers, prices is trading below them in an uptrend, above them in a downtrend, This is the weak side of the triggers, and I want you to avoid the temptation to say, oh, weak, this is a worse trade. It's not. It's still a long trade. These are the slowest stinking bars ever, and you can go from weak to transition to strong inside of one bar. But on the weak side of the triggers, this is where 1 minute areas are more likely to create a bounce to upset the apple cart. This is where maybe getting paid right at that area, should your management plan include that, and just waiting for the next better opportunity. Now, if I'm in transition, transition says to me, it could go the distance, or things could get screwed up in an area. It's in transition. This is where I'm getting paid right at trouble. I'm getting to break even, and I'm saying, okay, whatever happens, happens, because it's not really strong or weak. If you memorize this picture, you will never wonder how you're going to manage your trade. You'll know exactly how you're going to manage it before you ever enter. And now in the KISS plan I gave you, there's your TV KISS plan. There's your workspace. How to read the 15-minute chart. There is your trend trade entry look, telling you exactly where to put your stops, where the market shouldn't go, and a couple pictures. It also opens the door for a momentum trade for you guys. Momentum trade should be the second trade. It's a more difficult trade. You got to think a little faster, but it is an effective trade. So there's your TV KISS plan. And now I do want to talk about your NinjaTrader management, because I don't do this every day, and I think this is probably a good one because we've been running out of stuff today to talk about during the day. Your KISS plan for NinjaTrader gives you very specific instructions on how to manage your high probability trend trade. If you take the medium probability potential to break trade, it has a different set of management, guys. So every time you add a trade, you add a different type of management. Every time you add a trade, you add a different set of entry rules. So get really good at the one thing before you start confusing yourself with the multiple things. Your KISS plan says, and it's very dependent on entries being taken 2 ticks below the area of resistance inside of triggers. This is where that is the best of the best entry right there. You've got to get that down. Now your management plan is going to be based on 2 contracts. You're on simulator, double up. And it's going to help you understand stop placement, which is imperative, where the market shouldn't go. But it's also going to get you focused on getting paid. One of the things we all do as new users is we hold for the home run. We hope for the big move every trade. I want you to get in the habit of learning how to accept smaller denominations, knowing that you'll grow into finding the bigger ones. You'll create your own plan based on your ability reading the indicators. Good morning, Cav. Good to see you, man. Pull back to the area inside of triggers. Initial stops are 4 to 5 ticks beyond the triggers. That's where the market should not go. You will know your risk before you ever enter the trade. That's kind of a nice feeling. So if you enter at 71.34, this is crude oil, your stop is at 71.49, you have $150 per contract risk on this trade. You have to accept that risk. If you put your stop below an area, it's likely to get hit. If you put it in the retracement zone, it's likely to get hit. If you put it where the market shouldn't go, you've given the market the best chance to do the right thing. And sometimes they're going to get you. Your initial targets are going to be at $100 and $200. That's it. We're shooting for a $300 trade as we learn to read our indicators. If they do not hit your stop and you get a reversal bar in the direction of your trade, you're going to redefine where the market shouldn't go. And that's going to be 2 ticks above that reversal bar, guys. And your new risk is $30 risk per contract as opposed to $150. And why we define this as where the market shouldn't go is because the buyers already fought. The sellers took over right where they were supposed to. Guys, there's no reason to keep this inflated risk on a trade. We're better than that. But there's nothing to do. It doesn't guarantee a winner. It's either going to go to my stop or it's going to go to my first target. If it goes to your first target, one contract is automatically removed. Those funds go into your account. Guys, you're a winner. Your palms aren't as sweaty. Children are singing songs about you, right, Pablo? And guys, you are feeling great. And you're going to go break even on that trade. You are paid, and now you have no risk. And it's important that you understand this is not where the market shouldn't go. This is a stop placement designed to do nothing else but create courage and remind you that the only reason you're in that trade is because that big honking chart said down with strength and nothing in the way. You're learning to be brave, and they're either going to stop you out, you'll make $100 and wait for the next trade, or they're going to go to your second target. And if they go to your second target, guys, that's a $300 trade. This particular trade was all of 4 minutes long. This is the path to success for the brand new user. Keep it very focused. Keep it very pragmatic, very if-then. Learn to read your chart in relationship to advantages, and you'll begin to see more. Let's see if we can go to a live market. The triggers are up. I'm on the strong side of the triggers, but do you see how I'm inside of trouble? I don't have anywhere to go. I'm literally hovering inside of trouble, which means that rule number 1 is not met, which means that there's just no reason for me to look for a trade. I'm all about rules. S&P is starting to get momentum, but it's not quite there. If I get separation, I've got room to trouble. I'll just have to find an area inside of triggers. This is my large chart read. This is my small chart read. This is my, hey, I've got nothing to do. I'm going to sit on my hands as part of the 90%. Guys, are there any questions about trend trades on NinjaTrader? Are there any questions about trend trades on crude oil? Sometimes you just don't get an entry. Sometimes the market doesn't give it to you. Sometimes the market's like an ATM. You'll never know. But every now and then, it'll give you just a little something, something. All that momentum, nothing in the way, pulled right back to one-to-ones inside of a trigger, and it has been Downsville Population U ever since. The more you study the pattern, guys, the easier it is to react to that when it happens so quickly. All right, this is where I take a break. And I'm going to go stretch my legs because price has reached a divergence low and all of the triggers are above it and I don't have momentum. And Pete's about to post a picture of the short. Well, you just got stopped out, Pete. Yep. It's the other cool thing, guys. Every time you post in my room, it's a private session. So we're going to get into the chart reading side of it. One of the things that I do ask, and guys, this is important, and it's not for me, it's for you. I can look at your chart, and I can tell you exactly what you did, exactly why you did it. I can even tell you how scared you were in the moment, because I've been doing this for a while. I need you to annotate your charts because you're learning to read your indicators. So talk about the momentum. And guys, in the beginning, don't just say, hey, strong triggers. Say the colors match. The smalls are below the large. There's space. These are strong. Rule number 1, create the connection between what your eyes see and your brain is required to think. Talk about your path. Talk about your entry. And guys, what you're going to do is you're going to get the best private session I know how to give you, but you're also writing a recipe for success. You're literally writing out what it takes to put you in your awesome trade. If you're on TradingView, talk about the direction. Talk about how you're going to manage it with where price is in relationship to the triggers. Talk about whether or not you have room to targets. And then, I think this is a big part. Small triggers rolled up, so I need a pull back to an area and a down bar that finishes on the weak side of the triggers with room to trouble. If you go through this process, guys, you're not going to wonder if it was a good trade. You're not going to wonder if your rules were met because you're going to be so in tune with your rules, the market will slow down and it'll be just like this. Strong triggers, clear path, don't have an area inside of triggers, boom, nothing to do. That's the goal, but that takes repetition. So I'm going to take a few minutes, guys. When I come back, I'm going to click on every chart posted in this room. Do me a favor, if you're brand new, don't be the trade police. I'm not. Don't be the trade police. Don't tell someone they did it wrong. Don't call your shots in the room. Just know that we're going to go back to every chart, momentum, path, and entry, and you're about to see some really cool stuff. Some really cool stuff about how the market moves and patterns. Tesla Nerd says, you guys and your company are really the bomb diggity. Personal and helpful beyond. Appreciate that, Tesla. We are rooted in customer service, without a doubt. And it just so happens we have a genius at the helm that is good at customer service. He's fun at a party. Up, and here he comes now. I'll be back in 5 minutes, guys. Go stretch your legs. Get a drink of water. Back in a few. I'm muted. All right, everybody. I'm going to scroll up to the top of the room. I'm going to click on some pictures, and we're going to talk about them. And reminder, guys, I have absolutely no desire to be the guy that tells you what to do. My wish and hope is that I get to be the guy that helps you learn to read your indicators, that helps you recognize advantages, that gives you the ability to see more. And just a heads up, if you're new in my room, post a picture of your cute dog. Just let me know you can post a picture if you never have. And man, if it's of your puppy, all the better. We do love dogs. All right, Victor. Got a couple from Adam. One from Pete. There's Andy. And one more from Pete. Guys, if I ever miss one of your pictures, do me a favor. Let me know. Don't let me get away with skipping a picture. It's never intentional, but there are a lot of posts, and sometimes I miss them. Trading view, the trend is down. It's in transition. Room to trouble. It looks like a 1-to-1's right there, and maybe that was flashing. There is your pullback to the area. There's your close below. And down it goes. And here's what's kind of funny. Wayne, are you in here? Wayne not be in here. So Trina, I want you to give Wayne a little bit of grief when you see him. Close below zone and triggers. He was already in on the other bar. Jumping the gun just a little bit. And sure enough, it's a great looking trend trade. And then it comes down and it hits his target and doesn't fill. And he's like, whoa. And then it hits it again and it doesn't fill. And guys, if you are trading in the evening in a market without a lot of liquidity, this is something that can happen. You'll notice that Wayne tightened up a lot. He goes, man, it didn't get it. I'm not giving it all back. I love that. That's a good approach. He knows where he wants to get out. He has a reason to get out there. So he's not going to give all his money back if it decides to bounce. Really well done. And then sure enough, it finally got there. And this is one of the things that I really appreciate about my more experienced users. My trading got easy when I wrote down a plan. I had someone tell me that once. There are no mental plans. Number one, look for momentum with trend first. Trend trade second. Strong triggers, room to targets. Guys, I met a gentleman. I was at the motorcycle races in Austin, and he's a guy that's been with Nexgen for probably the better part of 20 years. And he told me that he spun his wheels for years until he finally committed to a very simple plan. And once he had a checklist for entry, it changed everything that he did. And guys, this is someone that's still around. And there's a reason. All right. Weak top, debatable. Pivot, stop out, right at a fib. Strong triggers, 3 triggers through. Ninja Trader crashed in the middle of this trade. There was a line just above the add-on where you entered, right on. Out with trade evade as you couldn't see what was happening. And that's one of those things, guys. If you can't keep up with what's going on, great job. Pete says, this is my business. This is my investment. I'll just exit. And you still made some decent money on it. He's like, but that's okay. There's going to be more. There's always more. And here comes more. Market reversed, strong triggers. You say 3 triggers through, but where you took the trade, there was only 2. That's okay. Market comes down, gives a little stutter, and once he gets below trouble, Pete says, I'm going to use that momentum on 2 charts and see if we can't collect a little money. Momentum. Guys, everything that you see done by more experienced users, momentum. Look for momentum. Have momentum. It's a very recurring theme. Strong trending market, broke through, room to trouble, jump the fudge in. I love that. John, have you seen that one, the JTFI? Jump the fudge in. Half off at 10, rest off at target. Guys, when you have momentum and path, I'm telling you, you will find a way. Momentum, room to the fib, into the midband against the gap theory a little bit, pull back to the area inside of the trigger. Sure enough, it goes up, hits that fib again. Pete, did you recognize the gap theory working against you there? Great management. But one of the things that you do run the risk of when that gap theory is happening is this one just getting run over as it goes all the way down. And I'm asking Pete, not because I'm saying, dang it, Pete, let me wag my finger at you, you did something wrong. But when I see something on your chart, I'll bring it up. Hey, did you notice that the large triggers were a full bar away? Were you prepared to manage? And it started to. Yeah, it's a good pattern. We watched it the other day in the room. I love this. Price reached the area. None of the triggers break, divergences, and just 20 pounds of yuck. And Pete says, I don't have to take this trade. There's too many opportunities in the market for me to feel compelled to hope and to wish and to pray for victory when all I really have to do is let things break, find a way. Good job, Pete. Great trading this morning. All right, the trend is up. Price is on the strong side of the triggers. Space to the next area. Price pulls back to the midband, closes on the correct side of the triggers right here. You're in at 05, up at the very top. You have room to get to trouble, only about 2 ticks worth, two points worth, and that's what you squeeze out of it. Nicely done. Small gain. So, Victor, $40 to trouble, right? And trouble put the brakes on it. One of the things that I'll do is I'll recognize your thing. What do you do that gets you? And you are the $40 king. Victor, that's your thing. Can we look at this real quick? I want you guys to see something. Once this bar prints, that's your trend trade, right, Victor? Your stop has to go below the pivot. And I don't know where you put your stops, but if it's below the pivot, it's down here, and it's fixed. If the risk is too much in regards or comparison to the potential reward, did you guys know that anywhere from that entry point, you can still get in? Like, unless something changes, you can say, I love the trade. I'll put something that cuts my risk in half. I've been known to do that. Even look for little pullbacks to the small triggers up. But great trade, just know where to go. Made it a little harder to manage. 15-minute long, strong side, clear path. And then, Paul, you and I did the exact same thing. Paul jumped ship after his entry. I did the same thing a little later when the market, when the small triggers rolled down and the large rolled down. And what Paul and I both neglected to do, and Paul, I love that we both did it. I feel better about what I did, is that this 15-minute was on the strong side. And that's your best look ever. And Paul and I both, I took the exact same trade and made the exact same management mistake. We both got talked out of the perfect trade because we started focusing on the small chart. And Paul, thank you for making me feel human on this one. I'm glad someone else did it. I even had to send a picture to my brother. I had to send the picture to my brother and go, hey, this is where I messed up. This is where I messed up. This is where I could have had a lot of money, but I didn't. Is my 1-minute NASDAQ showing double divergence? Mine is not. It doesn't mean that it's not there. Let me make sure that my divergence is working. It is. Let me reload it for you, Phil. Maybe it's on my end because I do so many changes. Is it the same data feed? I mean, you've got nowhere to go anyway, but one's AMP and the other is TV paper trading. I wonder if that makes a difference. So I'm opening a brand new one. And I've got double divergence on paper trading, and I don't have double divergence on paper trading. That is interesting. Fortunately, 3 divergences is your termination condition, so that is interesting. I don't know why that happens. Let's see if I take it off and then put it back on. It might just be when they were open. Maybe there's like a tiny little discrepancy. That would be more of a John Novak or a Jason question for sure. But no, looks like mine are different too. All right, back to Pete. I love this. Do you guys remember we saw just a couple moments ago where Pete said, nothing going on, not going to do it. I can wait. The next trade is coming. I believe in my advantages. I believe in my indicators. Boom, there it is. Eventually, the large crowd won. Pete waited for it, gets above trouble, makes some money, and he's out with a loss of momentum. And that is awesome patience, Pete. And when I saw you post this one, I thought that's pretty cool. That he sat through all of this and even took a picture and labeled his chart. This is not my money. But it turned into the trade. I'm telling you guys, you don't have to be in every move to be successful with this software. Great job on that one. Trend trade, the triggers are up. He's on the strong side of the triggers. There is ample space to the next area. Should have exited trade once price hit 25,649 at the next supply and demand area, which was 12 ticks above your first profit target. Instead, I gave it a chance to see if it would go over, and it did not. Closed at 25,642 for second profit. So you were in at, it's hard to read, 1 second. Pull back to the area, and then this actually becomes resistance, right, Victor? When you get a full bar below it, it becomes resistance. Great bar pattern for entry. And you are in at 38, which I love. White bar up from the outer band, open above the HVA. You're there. And then just zoom, baby. Off it goes. You get paid on the way up, and you give it a chance, and it doesn't. Nice job. That's a great trade. Really well done, Victor. 15-minute down, strong side, clear path, not at upside as I did on 1 minute chart. Close above small triggers directly into trouble, minus 280 against the 15-minute triggers. That's some good self-reflection, right? I fought the trend and lost. And guys, how many times can you do that? Paul, if you're gonna fight a 15-minute, it makes way more sense to do it from a termination, right? When your rules say, okay, no more shorts. If you really want to fight that 15-minute, there was a long to be had down here. Does that make sense, Paul? But from the middle of nowhere, these triggers are probably going to win more often than they don't. Counter trend. Trend is your friend. Trend trade, triggers down, transition, space to the next area once again. There is your pullback right to the area, close below, easy money. Great job, Victor. You're making it look easy. Nicely done. All right, Adam, good momentum, room to target. You take the second entry, pull back to the area, goes up, get paid at trouble. Third divergence, GTFO. Nice management, Adam. I don't know if he's still in here. Nicely done. 3 divergences, say the party's over. He gets out of the party. Same trade. Odds favorable momentum. Breaking through. You get above the fib. Entered at 1 full bar above the fib. Did ya? Did you, Pete? Got to get Pete a little grief. So that bar closed above the fib. and then it sprouted a tail? Because the bar didn't close until up here. So it closed, this bar formed, and then that bar pooped a tail out. You know that I know how the software works, right? I'm just kidding. So it probably came up, broke through, and Pete got in. Should have been up here if it was really a bar through. Either way, it's great. It pulls back, doesn't scare you because of the large chart. Making money, Pete. Nice job. Nice job. I got to give you a little grief every now and then. Make sure you're being honest. Andy V, good to see you trading. Triggers up, room to trouble. You get in right before trouble with everything screaming up. You say, with all this momentum and nothing in the way, let's make a couple $100. No, delayed entry 30 seconds. Did not test entry this morning before starting. Was only able to move profit target stop loss one time each. Could not move the first move. At the mercy of delayed entries. Andy V, have you gotten with Jason to see if there's something he could notice in there? Have you let Tech take a look at it? And I'm assuming this is gold, right? Which has plenty of volume. But a 30-second delay, that's, man, that's like running the 100-meter and letting everybody start at the 90th meter. And I love that it worked out, but man, I would do some heavy research on that. It's had to redo the charts. Are there internet challenges out where you are, maybe? I'm not sure. Something is odd. I love this. Everything is down. Nothing's in the way. Yeah, fiber should be good. Get in below trouble. Get out if things change. Pete, great job today. Up a grand. I love it. Justin, you don't trade the market flow, I guess, is the easiest example. Are we talking about? Are we talking about TradingView? Cool. So market flow for the brand new user gives you these high volume area lines. Green is buy, and magenta is to the short side, and we haven't had any in a while. We're not trading market flow. Market flow is not a way to enter unless the rules are met. There is a trade called an HVA trade, and let me go to the instructions. And I can't give a market flow 100% less than, what did I just do? So what I'm going to do is I'm going to give you some resources first, and I want to talk about one of the most basic ways to use it. And what it does is it gives you an opportunity when there is a top or bottom. I'm struggling with my button pushing. So this would be the first one I give you. Is come in here and start looking at some of the market flow stuff. Whether it's NinjaTrader or whether it's TradingView, it's still the same indicator. You've been testing entry with a buy or sell away from price first thing. Did not do it this morning. Right on, Andy. I just feel like there might be a way to fix that. It seems like there should be. That shouldn't be something that you have to accept as normal. A 30-second delay. And then, Justin, this is one of my brother's classes. I would say watch this video. He talks a lot about what the bars are doing. And he talks about these volume breakouts. And that's one of the ways that you can use them from tops and bottoms is to find trades. But really, the way most new users use it is what we call an HVA trade. And a high volume area trade simply means that your large chart has reached a termination. Can't go long anymore, can't go short anymore. So it's important that you know the areas that can stop the market. And then it means that you've got room on your small chart to get paid. That should sound familiar because you will be going counter trend. And then your entry comes at one of the HVA lines that market flow produces. So let me see if I can find an example of an HVA trade. That's probably not going to be it. So let's look. We'll see if there was one off the bottom. There was not, because I reloaded, so I don't have my market flow. So Justin, what happens is it is going to look very much like this on either platform. First, it's a termination. Then your small chart triggers roll by the green line. And that's it. By the green line. First, it's a termination. Then your triggers roll. Sell the pink line. And that's just the HVA trade. And that's really how you're going to use market flow. There's so much information on it. There are the highest concentration of buyers and sellers. There's sellers and buyers and dots and wicks and all sorts of stuff. This is the most basic way to use it to your advantage. Identify a termination. Let the smalls get on the right side of the large for the trade. Buy or sell the HVA. It is, and that's exactly what it is. I like that. So this area held, and the sellers tried to take off, and the buyers fought. And that pink line, what that pink line is, and it comes off of a breakout bar down, it is the highest concentration of sellers in a breakout bar. So this green line is the highest concentration of buyers. And really what it is when the rules are met is this is the point where the buyer said, hey, if your rules are met and you sellers come knocking, that's where we're going to stop you. That's where we're going to push, because this is where we collectively decided all of us wanted to get together to go up. Does that make sense? And of course, if the rules aren't met, it's just a green line. But when the rules are met from a top or a bottom, so here's a good example. There's your breakout bar. When it's confirmed, it creates that pink line. It's kind of hard to see. And when they come back and hit that pink line, the sellers open up on them. That's the highest concentration of sellers right from trouble. And I think that HVA trade is the first way to take advantage of market flow. If you stare at it and try to give it more credit than it has, you're going to put yourself in 100 different trades and none of them are going to make sense. So go through the links and learn a little bit about market flow. And it'll talk about it a little bit. There's your HVA rules coming through. HVA trades. And then you start getting into a point where you can say, okay, I've got a trend trade, and should I take it? Well, it lines up with an HVA. That makes me feel good. I'm looking for a long trade. Oh, and maybe it lines up with an HVA line. And maybe I'm getting the momentum. And I know that that's not a complete, but it would take us 2 to 3 days of study to even broach complete. So I would start with the analysis and go through and read a little bit about what John said. And this video is outstanding. And this video is something that you can use on TradingView. And the trade that he teaches in this video is the only trade I take outside of a trend trade when it's right. And I'm a huge fan. And when you catch it very often, it's some big honking moves if you do it right. So I would watch that video. It is counter trend, Phil. It is 100% counter trend. There is no way around it being counter trend. But when your 15-minute hits an area, when you get that breakout bar up, when the next bar opens above it, that's the trade right there. And if you look at it, Phil, these triggers are down and I'm on the strong side. But because of that pattern right at the termination, it went to the target. It was kind of nice. That was the trade I was in when the class started. I love this trade, and I messed it up. I got in and I was trying to move my stops, and I put my target where my stop went. I grabbed the wrong one, so I had to re-enter. But I mean, that's a 4 lot, and that was almost $1,000 instantly. It's got to have the termination. So Justin, as you go through and look at this, man, ask me a million questions. Ask me a million questions. I believe it did. Well, I had to start class, but my entry, what time was it? It was probably somewhere right around here. I think it was that one. And it did. It straight lined up to the mid-band. They've changed a little bit since then. I'm such a fan of that trade, though. But it's got to be right. The conditions have to be right. Good stuff. All right, let's do some more pictures. For all of you cool kids that are a little new in here, I'm going to tell you, it's a lot coming at you in the very beginning, but what you're going to find is that what everybody's posting, you can go back to it. Look, momentum first, 50% of the triggers are through, which means that he needs to manage well. Perfect pullback directly to the area at the top of the triggers. Target 1, target 2. Sergio, this is the perfect trade. Nicely done. I mean, that's the easy one, man. Great job. And I love the annotation. And look at this, guys. It's only 50-50, medium probability. I'm going to have to manage. I think that's the most important annotation on this chart, Sergio, because you understand momentum, you know potential, but that phrase right there is going to be the difference between hoping something works out. Oh, same trade. You wanted to make sure I got it. Took it from the lesson yesterday. I love that. Guys, that's one of the things that you'll find. If you're willing to post in the room, I will give you everything I'm capable of giving you to help you trade better tomorrow. And Sergio, I love it when you guys come back the next day and use those lessons and find a way to capture a little more. Great job. And I think that's all the pictures. Let's see what the live market is doing. The triggers are up, but I don't have any room. Egads, nothing to do yet. Do you guys see that? With the triggers up, from where the market is, it's directly into one-to-ones. There's very little room to the bottom of that zone. They might be trying to put in a top. I don't know. I'm going to let them either break above or reverse. I'm going to focus on having my rules met. S&P had a termination, perfect, reversed the market, gave me strong triggers. If I take the pullback to the area inside of triggers, my stop goes all the way up here. But that was it. Do you guys see it? That's that split triggers that we talk about. If my stop belongs where the market shouldn't go, and I take this trade at the area, the lowest area of resistance inside of the retracement zone, I am looking at 6 points. 6 points of risk. You guys want to see what happens? The mid-band is not a termination condition because the large triggers are not a full bar away. The market, the top of the retracement zone is 73. My stops are set at $100 and $200. You guys want to let it play out? First, it's momentum, then it's path, then it's the pullback to the area inside of triggers. Now, guys, with this much risk in my own personal trading, I would probably wait for a reversal bar, but it fits the rules. I have momentum, my path is clear, it pulled back to the area, so now we're going to kiss plant it. If I get a reversal bar in the direction of my trade, my risk will go from 6 points to approximately 1.5 points. All I need is one little push with all that momentum from the sellers. There's my reversal bar. Watch this. Oh, that feels good. First targets are set at $100, so there's nothing to do unless they hit it. Oops, there's $100. Now I go break even, and now I just sit on my hands, and I say either get my second target or don't. And with a little more experience, it wouldn't be uncommon to look for the bigger move from a strong top with all of that momentum and nothing in the way. Pam, are you still with me in here? This is what we talk about every day, this one trade. We've already been paid on it. Let me show you where we got paid on it. There we go. Perfect entry, first targets. There's just nothing to stop it. Why would I touch it? So in the beginning, it's hard to see this. It's hard to get your brain wrapped around it. But if you always go back to first it's trend down, then it's separation, creating momentum, then it's a clear path because a mid-band is only a termination condition if the large triggers are up above this yellow line. The perfect entry, very little risk once it goes down. There's already money in the bank. And at this point, everything is going beautifully, isn't it? And my targets are all messed up. We've already done the 300. I don't know where I got my numbers on this one. 68.25. We should have been 64.25 was our $200 target. But let's do this, just for grins. Let's see if they want to give us a big move down to Fibonacci. We've got nothing to lose. So the only reason we'll exit this trade is if we get 3 divergences in the same price range. Otherwise, let's see if we can fulfill some expectations of strong trigger lines and nothing in the way. You guys good with that? Simulator is where to do this. So we go through what's changed. Well, now my small triggers are down. I love that. My large triggers are down. I still have momentum. Everything on every chart says this market is more likely to go down than up. Why on earth would I panic? There's a pullback to an area inside of triggers. Is it going to get us? I don't know. I got nothing to lose. I don't care. Technically, that's just another trend trade. Let's see if that mid-band is going to be the spot. It could be, might be, I don't know. We'll find out. Guys, are there any questions about why we entered where we did? And it's already been a $300 trade. Now we're just going for home runs, right? If this were the KISS plan, that's the actual stop. And it's already been there, already done that, already made our $300. We're just having fun because we're running out of pictures. Let's see if momentum works. Now, if this is a third divergence, I don't even have the potential. I'm not going to worry about it. My triggers are still down. I've gotten another pivot right off the area inside of triggers. Look at that. That was our entry. Pull back to the area inside of triggers. Fun stuff. You know, I don't panic when I trade anymore. I know that this is a trade that could either win or lose. That's its only options. There we go. We made 112.50. I feel pretty good about that. What do you guys think? 112.50? Anyone mad about it for a couple minutes worth of your life? Would have been 300, but I put my stop in the wrong place. All right, only one corner above small triggers. That's a good lesson. Phil says this is an important detail if you're just learning the trend trade. Just because it's a nut bar, it's not an entry. Great look there. And look what happened. Nicely done. What's going on, Alex B? Everything says down. You have room to trouble. You jump the fudge in directly into trouble, and it creates a big ugly bounce for you. So, Alex, the question would be, and your annotations aren't clear, why trade directly into a fib? Why not give yourself some room to make money? That's okay. You know that areas can create bounces, right? Areas can create bounces. So if you see it, it can create a bounce, and it absolutely did. And then the next area created a bounce right to your midband inside of triggers. And then it started to go down with the momentum when you finally have the potential to break. Does that make sense, Alex? I know you guys love these jump the fudge in trades. And guys, when everything is clear, those jump in trades make sense. They really do. But what you did, Alex, and I love this picture, is you said, man, I sure hope that thing in the way breaks. Instead of just waiting for it to break or giving yourself room to get a running start. You literally traded from the back window, hoping to get through the wall. Does that make sense? Little patience. And you knew it wasn't right because you jumped ship instantly. You didn't even let it form an up bar. You just said, oh shit, that's not right. Which is okay. I've done it. Better to lose a tick than to give back a couple points. And now they're just dancing a little bit, right? And Alex, you have fibs that I don't have. It might not be you. It might be because you've got these other market flow overlays and stuff. It might even be your time zone. No, we're in the same time zone. Let me reload all my historical data and see if it makes a difference. Cav, have a good one. That's okay. Oops trades happen. Oops trades happens, guys. Alex, I think it shows that you understood it was an oops trade because you were willing to exit it rather than just hope it works out. That's hard to do when you're already in. So good job. Let's see if a reload of data gives me those fibs that you have. Looks like maybe not. All right, John Novak gonna post in the room. John says, you know what, Mark, let me take the same trade on TradingView. Okay, so the triggers are up. You pull back to a midband and you just get in. And what HVA work are you doing? 15. Oh, he's using the high volume area line on the market flow over here and saying price open below it. So this is, guys, if you're watching that small chart pattern, John just used it on a big chart and said, man, I'm on the weak side of triggers, I'm below trouble, I got a giant breakout bar and an open below. How's that one going, John? I think it's still on its way down, isn't it? It is still on its way down. Nice trade. Not going to lie, that trade takes a little testicular fortitude because it is counter trend. Half off at trouble, absolutely no risk. Ah, I love it. A leopard can change its spots. Well, that's true. But remember when you said these are up super strong and that means more up and you traded directly into them? So sometimes you might lean on what you want when you're as good as John Novak is. You pick and choose a little bit. I think these triggers, I think it's too slow. That's my own 2 cents. Now we're into trouble at 57. I see a VWAP. I see an outer band. I see 1-to-1s. Flat is perfect. Nice trade, John. Really nice trade. You can be on my team anytime. And guys, this is why break even is not where the market should not go. No, we took the short and we kiss planned it, which had us out at break even, but it never went to where the market shouldn't go, never even got close. So you had 2 different platforms telling you that shorts have a great shot. Good job. Is it just me, or is it awesome that John Novak, the guy that wrote the indicators, is here and trading and doing stuff and sharing? And he answers questions and he's completely available, which I think is pretty outstanding. I don't even like him, but man, he's good at this. There was your crude oil long. Boom, boom. Look at that. Pow, pow. And then that would have been part of your 70 or 20%. And I like this. Good top means bigger shorts. Does anyone remember when we started and we were talking about a strong top or bottom? How it's not mandatory for those trend trades, but if you see one before it, you start feeling good about it. That just got reiterated. And now we've reached Fibonacci support, and none of the triggers are broken, and we sit on our hands for a minute. Trading edges. All right, guys, we're at that point. We're through your pictures. Let's ask some questions. It's interesting. I was a sit on the front row kind of guy, raise my hand, get all my questions answered. It used to piss me off if I paid for a college course and I had a question leaving that course. So you guys should embrace that. Opening range high at 15-minute testing, Tesla. What market are you trading? I don't know what you're talking about. Whoops. Miss Trina. NASDAQ. Let's see, Miss Trina. Triggers are down. Strong side. Momentum on the small chart. Momentum entry. Beautiful trade. Did I? It's because I'm mad at you. Have you noticed that your entries keep getting better and better on these trades? Your entries keep getting better and better on these momentum trades. Less and less risk, more and more profit potential. Yeah, I get it. I told John the other day, I said, man, I still get a little scared of the momentum trades. They don't jive with me. I don't see them the way I want to. I can teach them all day long, and I know they're fantastic because I watch you guys take them. But for whatever reason, my brain has a hitch with them. I don't know why. but I love them. All right, let's see what happens. At the time of entry, they were still crossed up. It pulled back to the areas. You get the close above the triggers, and you make money all the way up, Trina. Now, can I ask you, and this is where I'm about to be all sorts of impressed. If this was your thought process, price comes back to the area of support. And Miss Trina never gets the body of a bar that finishes below, which means this stays support, right, Trina? It never changes its role. So when you get the close above, it's not prairie dogging. It's not trading into an area. That area is still support. And it sets you up for the beautiful trade. Really nicely done. Did that go through your head? That's what you were thinking? Because that's amazing. That's amazing chart reading. That's in the moment chart reading. And the same is true with the one-to-ones and this zone. They're all just like a collective support at the moment. And you had a VWAP. You had everything. Great job. Sorry I missed that one. That was some fancy chart reading. Not so much about support, that collective areas. There's so many of them there. If everything on every chart says don't go short, eventually you find a way to go long, right? Maybe not as a brand new user. Uh-oh, John's got a favorite pick. Strong triggers after a strong top or bottom using the 5-1. No long trades in determination, Fibonacci areas. Instead, wait for it to roll. After a strong top on the 13-2, you want to take the first, second, and any short opportunities the market presents. Not worrying about support on the small chart so much. And then there's the same thing from the bottom. That's a good picture, John. And that's what happens once you start to read your indicators a little bit. Once you start to recognize these terminations, right? That second higher divergence. This is exactly what John's talking about to set you up the other direction. It doesn't have to go, but if it gives it, you've got a little more confidence, which is, I think, pretty cool. And that's a lot of trading. It's just the trust and the belief and the confidence that what you're working with is providing an edge. And it's that edge that takes you into the trades and gives you the reasons. So nice job, John Novak. I like it when he pops in here. It's fun when he teaches a classroom too, because most of you blow out the next day trying to do what he does. Large triggers are still up, small triggers are down, but everything is way above support. Support's got a good chance of holding. We'll come back and test it. And Tesla, that was your daily high at 78? Is that what you were saying? Which just added fuel to the fire to look for that short for John. That's pretty cool. They know, right? They know their numbers, guys. They know where they've been. They know what they've done. They know where pivots are going to be. They know where their prices are. And now you have the keys to the kingdom. One of the stories that I love that John Novak used to tell, when he was creating Nexgen, when he was writing the algorithm for the software, and John, please correct me if I butcher your story, he had a buddy in the pits in Chicago, and that his buddy's job was to know where the institutions were doing business, where their buy and sell numbers were. And of course, you can't give those away. But as John was developing the software and creating the algorithm, he would send his numbers to this guy in the pits in Chicago. And what would happen is when John got within 50 cents consistently, Nexgen was born. And guys, it's no mistake that his Fibonacci areas are notorious for stopping the market to the tick. That when resistance breaks, it behaves as support. And once you get a little bit of trust in the love that he's put into the software, it really does make trading pretty stress-free, I think, because it becomes either rules met or rules not met. And rules have an advantage. They have an edge. And trading is probabilities. That's all trading is probabilities. If you flip a coin 10 times, you don't know whether it's going to be heads or tails. If you weight one side of the coin, you can create a statistic that says, okay, well, now it lands on heads 7 out of 10 times. And I've tested that and I've proven that. And over the course of 100 flips, 70 of them were on heads. And then you've got to have the guts to always bet heads, understanding that 30% of the time it's going to be tails and you're going to lose that bet. But in the long run, you're setting yourself up for success. And guys, that's what we do with the software. We give you the rules, we give you the analysis, we give you the coaching, and then you put the effort in to learn how to use this amazing tool. Triggers are down. I do have room to trouble. Just waiting for a setup, right? Just waiting for a setup. All right, guys, I'm going to walk a lap for 5 minutes. When I come back, it's all up to you. If rules are met, we'll pull the trigger again. If they're not met, we're going to sit on our hands because, let's be honest, we're too good at this stuff to hope things work out. We're just going to take one that we know we can prove works out more than it doesn't and accept whatever the market gives us. So I'll see you in 5. All right, guys, here we go. Last hour. Whoops. Last hour. Let's see if we can do something smart. Triggers are down. Path is clear. No areas inside of triggers. If I am a brand new user, I just can't seem to get my rules met. Triggers are down. Termination condition, there is room down. Hey, Justin, there's your pattern for counter trend. Phil, that is your aggressive counter trend trade right from 57. That's the pattern, guys. Hit trouble, weak triggers, breakout bar, open above, room to trouble. I could do 260 a contract, feel pretty good about that. And then who knows how far it's going to go. If it's really going to be a bottom, guys, that's pretty solid. If you're not ready for counter trend, no worries. Justin, there's your HVA line that comes from the breakout bar. The HVA trade is the retest trade. The come back, the hit that green line, buy it, see if it really is going to be a bottom. Does that make sense, Justin? That's kind of it live. The video that I gave you, and guys, if you haven't watched it, John Novak's masterclass teaches you how to use this bar to catch that entry and be one of the first ones in when the institutions decide it's time to reverse the market. That was the perfect entry, and it's still going. It's up 24 points as we speak. Pretty cool, right? Can you guys hear me? Am I still muted? How cool is it? You guys can buy tops and bottoms, and you can have a plan to do it. How far is that going to go? I don't know. Doesn't matter. I'd have so much money in my account right now, I don't need it. And there it is on the S&P. Weak triggers, rule number 1's not met. Clear path, rule number 2 is met. No area inside of triggers. I don't know if, when, or where that market is going to go down. So I choose to do nothing. What would you guys like to talk about? What's on your mind? What's going to make you happy? What do you need from me? Absolutely, Jerry. Let me get there. This was a class, and just, oops, wrong one. For you guys that don't know, this was a class that a lot of people paid $1,000 for the week to be in. And I think John gave it 6 or 8 months or something after, and then it just became kind of a standard thing. But it's this one right here, the master class. Patterns will change your life, guys, because that's all the market does, is just patterns. You're welcome. Had to step away. Yeah, you just gave me the same one twice, Adam. All the momentum, potential to break, right? Adam, I think talking about your path will pay dividends for you. One loss of momentum with strong triggers, good first shot. Second divergence, it's in the process of dying. Third divergence, great management, getting out, not losing. But with only the potential to break, it is a series of red flags with those divergences, with those smalls working in. Does that make sense? So you talk about the momentum and you talk about room up. I think it's super important to talk about what your path looks like because it lets you know whether or not these divergences are potentially problematic. Your management is awesome. Your entry is great. I love that you got paid on a trade that ultimately fails. Good job. Good momentum, not a clear path, my friend. Right? Not even close. 2 triggers through, 2 triggers below. Once again, it's only the potential. Does that make sense? Not at all a clear path. Only area inside of triggers. It's more of a momentum style trade. I like it. You catch it on the way up. You have room to trouble. Nice job. Good trade. But do you see how it's not a clear path? And that's just, again, I'm not knocking it. I'm just saying that little understanding that it's not perfect, it gets your management hat on. It gets you prepared to react if something changes. 2 nice trades. 425 on 2 trades. 6-figure trading. No. Well, yeah, but you hadn't reached those yet. You see that big fib you paid good money for? That's where you took the trade, right there. So let me give you a picture real quick. And I'll drop this in the room. This is good for everybody. If price reaches an area, none of the triggers break, that's our textbook termination, guys. That's the one that says, okay, no more long trades. Let's sit on our hands, let's wait, and let's see what happens. If 2 triggers make it above the area that was just a termination, now it has the potential to break. And you'll notice, Adam, that I still have the number 2 red there. Why? Because with only 2 triggers, it's less likely to break. And those divergences become even more problematic. Pull the picture back up. If 3 of your trigger lines get above the area, now it's got a better shot at breaking. Now you've got a little more push, a little more giddy up. Your moving averages are getting above it. This is your best look for trading the potential to break. That's what the plan that I give you guys has on it. But it's not until 4 triggers, 1, 2, 3, 4, get above that line. That's when an area is considered broken. And it's never considered broken. It remains potential or termination up until that point. So if we look at where you took this trade, you're looking at almost the 3 trigger look, right between the 2 and 3 trigger look. So we just call it potential. And we don't call it potential to say, oh, you did it wrong, you read it wrong, what were you thinking? We just call it potential. So maybe you see divergence and you're like, whoa, it's only 2 trigger potential. That's not my best look. Maybe a divergence prints on the way up and you're like, hold it, it's not broken yet. I need to manage a little more assertively. Does that make sense, Adam? Just because it's only potential doesn't mean that there's not a trade. It just means that you may need to be a little more in tune with what's going on. So if something changes drastically, you can adjust, you can protect your investment. Great job though. And nothing ever changed. Nothing ever changed, which is awesome. So even though you were prepared to manage, it just never told you that you had to manage. All right, here's that gap theory again, guys. Price reaches Fibonacci. Large triggers remain all the way down at the reversal bar marker. Let's see if they close the gap down to those triggers. This is just a pattern. It doesn't say go short, but it says if you're going long, understand your retracement zone is all the way down here. And if it's not a strong bottom, If this is not coming from a termination condition very often, it will close that gap. And we'll see what happens. We'll see if it makes a liar out of me here. Good pictures, Adam. Good pictures. A lot of you guys just sitting on your hands today. It's weird that the guy that wrote the software is one of the few people posting. Maybe he sees something you don't. I just said that, John Novak. John likes to walk in after I say smart stuff and then just repeat it, claim it as his own. You guys know how it is with siblings, right? Even in our 50s. We are great. Just ask us. My wife thinks it's funny. She goes, you know, you and John are the exact same person, right? No, I'm not. I'm better looking. We'll see what they do, guys. Check that one out, John. Termination. White bar. Open above. That was boom. Money almost instantly putting in that bottom. And now we'll see what happens here. So we're just going to watch it, guys. We're going to see. If you took the long, I hope you got your management hat on, because you still don't have a clear path. All your triggers are below that fib, right? But Mark, price got above it. It's not price, my friends. It's those trigger lines. They're trying. They're trying. Let's open up the NASDAQ. It moves faster. And if nothing else, we'll do what we've done the last couple days, where we just do the audible, right? What is the chart telling us right now? What are our indicators telling us? And I do it for a couple reasons, guys. One of the reasons is I want you to see how quick your chart reads can happen. Smalls below the large. I don't have momentum up. Just nothing to do yet. ES on TV. Will the Ninja Gap theory work? Probably goes here. Have to get through this crap. We'll see. If NASDAQ is any indication, they're going to give it a push. We'll see what it does. NASDAQ said, we have a fib to get to, John. Thanks for that. But the NASDAQ came from a strong bottom. Nicely done. So you'll get different reads on different markets. You'll get different looks. That strong bottom on NinjaTrader is the same one that gave us the long signal over here. And John does love a second higher divergence. Loss of momentum at the bottom. Another loss of momentum when the sellers tried again. So here we go. 2 triggers through, right? We do have momentum. It's got the potential to break, but it's not the best look. And divergence is probably going to make it suffer. So we'll watch it and see what it says. It may just smash through, right? Strong bottom. Here we go. Still pushing. Still pushing. Let's see what Phil did. Phil said direction is down. Strong side. Pulls back to the VWAP. Everything, you take a close below. And then you are out when it gets back above. It's not a bad looking trade, Phil. Everything was down. Where did you enter? You entered at 68, just below the VWAP. And the only challenge with this one, oh yeah, there was a VWAP. There was an HVA right there, wasn't there? But it's already been to trouble. So when it comes from trouble, that's where I'm gauging. And I'm still not sure why you don't have the large triggers on here. Because if I'm not mistaken, when it came off of trouble, it odds favorable momentumed it, right? And look at where it's stuck. With the smalls above the large from the termination. Do you see it? I think these large triggers on the small chart are pretty helpful. Because if you recognize strong triggers, you recognize that they came right from a 2-chart termination. That's a pretty kick-ass reaction. That's pretty telling. I don't think they're that big of a distraction, to be honest with you. On the large chart, I think they can be. But I think on the small chart, look at that. 3 triggers through from a weak bottom. John, not sure what will happen. Not sure what the fudge will happen now. Price above, HVA line is good. Look for more going up. Zone holds plus Ninja. And then if you got to Ninja Trader, it said termination with only 2 triggers. There's your divergence, the biggest killer of the potential to break. Strong triggers, 3 triggers through. So Sergio, I want you to see something. In the KISS plan, a strong bottom is rule number 1. We don't have it. Separation between the small and large is rule number 3. We don't have it. No divergence is rule number 4. Don't have it. If you were following the KISS plan, the only advantage that you have in play right now is odds favorable momentum on the large chart. And I'm not sure if you guys have looked that over, but on the KISS plan, that's trading view. 3 out of 4 triggers through, we got it. Strong top or bottom is a no. Odds favorable, yes. Odds favorable, no. No divergence, no. Working with one thing, Sergio. Let's see what happens. And remember, that's just designed to optimize your chances of success, to give you the highest chance of success as a brand new user. Did all that make sense, guys? Is it the only way to take it? Of course not. But we're trying to win more than we lose, right? We'll come back to it. NASDAQ, strong top. Only 2 triggers through. Strong triggers, no divergence. Just don't have 3 triggers through. That one doesn't fit the KISS plan. Triggers aren't through support. Doesn't fit the KISS plan. All right, we'll just watch the ES and see what happens. Any questions, anybody? How we doing? I think one of the great things about what we do here, and Sergio, this kind of goes, if you say, you know what, I'm going to take this trade, right? You say, I'll take this trade, but I'll take it from here. It's pretty cool. You know exactly where your stop would belong, right? And you can say to yourself, I know it's not the perfect trade, but I'm comfortable with this risk with that level of momentum. And a lot of you will get to that point where you'll say, I'll take it. Some of you will say, well, that's 2 fights from the sellers before the area broke. That's small triggers down below the large triggers. That's not a strong bottom. I wouldn't be surprised if they were trying to get there, or maybe even all the way down there to that fib. But I'm not going to know until they're done doing what they're doing right here at that decision-making point. Does that make sense? Because of this weak bottom, it's not uncommon to see them go to the next Fibonacci area. The same reason when it is a weak top, it's not uncommon to see them go to the next key Fibonacci area. Weak top, here we go, strong bottom, weak top, continuation, weak top, continuation, target hit. Strong top, there's your fight. What are they going to do? Are they going to continue down back to that key area? Are they going to go up from Fibonacci support inside of a trigger line? Hell, I don't know. But I know that my rules aren't met yet. And because my rules aren't met, I'm cool doing nothing. It turns out my ability to guess stinks. My guts are the most inaccurate guts in the history of guts. So we're going to see what happens. Some of you are waiting for that reversal bar. We'll see what happens. You don't have snag it? That's okay. We can work around it, Justin. No worries. What are you using to take the picture? Can I ask? Well, I can't ask. I just did. If you use the snipping tool, it's free from Microsoft. You are using it. Okay. So when you use the snipping tool, one of the things you can do is you can annotate your charts. You can put boxes around it, right? So you could be looking at your 2 screens and you could take this picture and then you just have to edit it in Paint and go to text. And over here you could say something clever like triggers are down, room to trouble, and maybe don't do it black on black because that's hard to read. And over here you could say, did you go short? Pull back to area, close below smalls, maybe. I don't know if we had that one. Out half, holding for bigger move, right? So this little bit of an annotation though, and then just, I believe you can close that one. You can save it. It'll go to a folder. You can drop it in the room. So if you just wanted for your own records to have that, that's pretty cool. So I like that you took most of them off. Are you completely out of it? I see a buy stop, but I don't see any. I see 3 in and 3 out. Are you looking to take a long? And there's your pullback, close below, easy money going down. And then there's your pullback, down bar, easy money going down. Are you trying to go long here? Or was that your stop that you need to cancel out? And these will decimate accounts if you leave hanging orders. I've blown out quite a few with those. It's a good, both are good looking trades though, Justin. You just want to watch that VWAP and mid-band. But both of them make perfect sense. Easy money, man. Easy money. You bought at the bottom, so you went long 3 at 83? From the bottom of the move? It's hard to tell without any annotations because all I see is 2 arrows. So this was you were trying to go long? See how it's confusing without the annotations? This one was easy. Everything said down, you went down. And then that's your pullback. And that was a short, yes? I got you. Cool. What's this order hanging? That's what I'm wondering. Were you using that as your stop and need to cancel it out? Okay. Don't forget to cancel those out. I've done it. And there's nothing worse than coming back and being down 3 grand because you forgot to cancel your stop. That's all I was saying there. Both trades are awesome. Above HVA lines, pull back to the area, trading directly into trouble. Trading into areas, hoping they break is not the best way to do this. I said down 3K, jerk face. Market Flow gave you an opinion on up. Right on. My charts say down. Weak side of the triggers, but nowhere to go. Nowhere to go up, but this is NASDAQ. You might have been looking at the ES. That's the cool thing, guys. Everybody's got their own way, right? If we go to the deli, some of you will get ham. Some of you will get turkey. Some of you will have tuna fish. It's okay. There's a million ways to use the software. You've got to find your way. And I think that the point is that when your way... Did that was it came back to 6K? It's nice when that happens, Sam. You just got to find what way is best for you. And then I think the ever important question, John Novak, is do you win from stupid more than you lose? And the answer is no, because I've known you my whole life. Stupid rarely pays the bills. So why do we still do it? It's because there's that little devil on your shoulder that says, all my indicators say this will lose, except that one. That must be the smart indicator. But this is what we all go through. Everything says I'm going to lose this trade except one indicator says it might go up. I better listen to that indicator. I better listen to the one that says up because that's which way I want to go. And it's okay. But you got to learn to shut that voice up. You got to learn to shut that voice down, to let it be deliberate and pragmatic. I know, and I'm not beating you up, John, but all of us go through this. All of us go through these things. And we take it anyway. Sometimes it's because we're on sim, right? I'm on sim, who cares? But what you're doing is you're teaching yourself how to lose long term. Like it's so easy. Watch this. I'll put a 20 lot on and I was like, none of my rules are met, but I think it's going down, right? I'll put my stop way up here and I'll put my profit target way down here. And guys, it's a ridiculous trade. But if it goes to my profit target, I believe I am a genius. I believe I am the greatest trader ever with the biggest set of clackers that ever walked into a trading room. And then I do that with my live account. I'm looking now. I hope that's not my live account. But there's a phrase that Nexgen has been saying for 30 years. Short-term victories creating long-term failures. And I think that that's an important phrase to learn. Short-term victories creating long-term failures. We got 3 triggers through now. All the divergences. There's a fight happening right at a key area. John, thank you for posting that in as an example for people that are learning how to follow rules. I think that's pretty cool that you throw those lessons in there, even though you would never really take that trade for real. I'll be representing Mr. Novak in a court of law. What would you like to talk about, guys? What's on your mind? Phil, let's see what you did. Direction is down. Transition. You see that VWAP, right, Phil? In at 87. I like it. Out at the VWAP. Clear path. Target the zone VWAP. That's easy money, Phil. Heading to the driving range. I'm going this afternoon. Did that driver show up? I think it's tomorrow. Might be tomorrow. Best brother ever. I just bought the new TaylorMade and I'm having it shipped to John's house to test drive it before we play. Best brother ever. Yeah, I'm going to go hit it this afternoon here. I've got one about 10 minutes from the house. Probably. Who knows? Maybe you'll hit it great and I'll hit it like crap, and I'll just have to give it to you. Wrap it around a tree. Do not wrap it around a tree. Golf out here is like it is in Spokane. It's like 50 bucks. I love it. All right, Adam. Good momentum. 3 triggers through. Divergence, 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 divergence. Where did you get in? Did you get in here at the midband after 2 divergences? Adam? We're identifying your thing, right? You love to ignore divergence on the potential to break. And that's cool. That's your right. That's where I was for the last 6 months, Sam. My wife and I travel. And sure enough, man, it's killing these trades. Is it worth the stress? You're in Newport? Pablo, where's Newport? Pablo was my golfing buddy in north of here. So when I got to Phil, everything it's a good look. You gotta mind the divergences. They're gonna, it's just the small chart saying change, right? Small chart saying change when it's not the perfect. And it's still not going, right? And it said probably not going to work, less likely to work. Do you really believe it's going to work? Seriously, we're trying to tell you, for the love of fuzzy, let everything roll and get through. And I love it because you can use this small chart ideas to keep you out of that stress, Adam. And this is good. We're doing some identification right now. And that is good stuff. And then Phil, great job respecting trouble. Great job respecting trouble. Get the money in the bank. And man, that's 9 points. That's 180 bucks a contract. Money in the bank, GTFO. Wait for the next good one. Well, yeah, hope is a rough way. Is a rough way. So anyway, talking about the niceness of day traders. You're short on the NASDAQ now? We don't call our shots, John Novak. Let's see why. Triggers down. Nothing but room. That was the pullback. That was the close. There was room to trouble. And John says, let's give it a go. HVAs. Play golf, guys. You'll meet the best people. You'll meet the best people. It's fun. John, you don't play golf until I get there. I can't have you being that much better than me. Great short. Where are we at? 11:44 in the AM. I like it. Man, you guys have done good things today. John, special thank you to you.